point, we have Mr. Bharat Puri, who is the Managing Director at Pidilite Industries, to give us more insights on how the earnings have been. Welcome, Mr. Puri. It's great to have you on the show. And, let's dive right in and actually talk about, what are we seeing in terms of the demand, especially construction activities is coming back. We're seeing a recovery in real estate as well. So what is the sense that you are getting in terms of your consumer trends? How sustainable do you think this growth is?
See, there is no doubt about the fact that there is a clear improvement in demand conditions. Basically, three things are happening. One is there is still a fair amount of pent-up work in people's homes, and therefore, as the pandemic lessens and things open up, people are therefore finishing, whatever is the pending work at home. During this pandemic, people have also realized that the home is something they need to focus a lot more on. And clearly, both from a home renovation point of view and as well as new homes, you are seeing a surge in demand. You are seeing home renovation increasing. You're seeing uh, new homes. The real estate sector is clearly showing signs of recovery. And obviously, that reflects in good demand. And finally, as commercial establishments begin to reopen, whether it is restaurants, whether it is hotels, whether it is any large mall showrooms, etc., all of them have to, in a sense, because they've been closed or semi-closed for about 18 months, there is some amount of refurbishing, renovation that you have to do. So the combination of all of this, along with a good monsoon, I think is leading to fairly good and robust demand conditions. And in my view, I think this should continue. While inflation is a dampener in any developing market, the biggest tax that any consumer pays is inflation. So I do believe that in a 6-month period, inflation will, in a sense, impact demand a certain amount, but the secular trend is strong. So overall, I would say that the whole home and commercial improvement space, I think, will see some good times.
Right, Mr. Puri. So surely inflation could be settling down, but that could be a concern for a few more months. But, a lot of FMCG companies, when you look at it during their earnings, they have highlighted that they are seeing a moderation coming in the rural growth, especially from the month of September. So is that the case for your industry as well? Could you give us a sense on how is the rural growth versus urban growth? What is the trend right now?
See, as far as rural is concerned, it is unfair to compare rural only with last year, because if you remember, last year also rural and semi-urban India continued to grow from the second quarter onwards, whereas actually urban India and the metros actually came back only in the second half. So if you look at a CAGR, if I look at my growth, not only over last year, but even over the year before, which was a perfectly normal year, actually rural and semi-urban growths are fairly healthy. You will not see the kind of large growths that you saw over last year, because last year the only thing that was really open and was working was rural. But having said that, again, the trend is strong. If I look at a 2-year period, I look at a 3-year period, rural and emerging India will clearly be a strong driver of growth, at least in the overall home improvement space.
Okay, so I just do want to touch up on the inflation point which you spoke about before. Now, we are seeing the raw material prices continue to see inflation, and your market.
On India's specific situation, globally, supply chains have been thrown into disarray. The whole China factor, where China was a net exporter of a lot of these items and is suddenly becoming a net importer or is not exporting, is leading to a tremendous amount of volatility and even shortages. I think this is probably going to take at least the next 3 to 6 months in the least to stabilize, until we're able to say that, listen, global supply chains, overall supplies have become stable and we can see a stable outlook. Right now, I can tell you that it is fairly volatile. I mean, if you take our principal raw material, VAM, which is vinyl acetate monomer, last year, of course, last year is not a representative year, but I would say the average prices in a normal year should be anywhere between $1,000 to $1,200 a ton. These went up to $2,000 a ton in the first quarter. They started moderating a bit and again have gone back. And right now we're seeing the highest ever price of about $2,300 to $2,400 a ton. And frankly, right now, if you were to ask me what's my prediction for the next 3 to 6 months, the simple answer is wait and watch, because there are just too many uncertain factors. this whole trend started with the US winter last year, and the plant closures in Texas and Louisiana, so on and so forth. The winter is coming again. I think next 3 to 6 months we will have to manage fairly dynamically on a month to month basis, on a regular basis, because right now the supply situation, especially the inflation in raw materials, is really the thing that all of us have to keep a very close watch on and manage very carefully.
Right. So, Mr. Puri, I do want to understand one more thing in terms of actually inflation. So, like you mentioned, the VAM prices have normally used to be in the $1,000 to $1,200 per ton range, and now they are the highest level around those 2,300 levels. So, how much of this increase that we have seen in our raw material prices have you actually managed to pass on to the customers? What is the price hike we have taken so far, and could we be seeing more price hikes coming in because the volatility is still there?
See, we have always maintained that we will price conservatively, and we will try and price at only 70 to 75% of inflation for two reasons. A, we would like greater operational efficiencies, greater productivity. And also, hopefully, this is not a long term trend, because it is not that worldwide demand has gone through the roof. It is actually a supply related problem. These capacities exist. Hopefully, they will get equalized and will get stable over a period of time. So we have priced at about 70 to 75% of inflation, which is why you will see we're at the lower end of our margin range. Normally we try and maintain our EBITDA margins at between 20 and 24%. We're now at the lower end. I think going forward, we will have to do careful management of this until we see a stable situation in input prices.
Okay, right, sir. So 70 to 75% of the inflation is what you all take the price hikes at. But, sir, just shifting focus and talking about the consumer and bazaar business, we are seeing you managed to post a good growth this time as well, if you look at it. But, what is your growth outlook for this segment going forward? How much of this growth do you think is sustainable given the current demand scenario?
See, I think clearly, while the growth numbers may not be as high, because this quarter is probably amongst the best quarters from a growth perspective that we've had in a long time, there is no doubt that there is two things are happening. A, there are good demand conditions. B, as an organization, we are gaining market share. And as long as the economy remains robust, GDP growth continues on a good, strong keel, I see no reason why demand conditions will not continue.
Right, Mr. Puri, but I just want to understand in terms of volume growth now, what can we expect in terms of volume growth from the company for the rest of the year and overall for FY22? And what is the growth across categories that you're seeing?
See, right now, given that the trend in home improvement, new homes is across the board, actually, it will be broad-based growth. If you look at the first 6 months, it's not that one or two categories have grown. All our categories, the major geographies are growing at a strong rate, and we expect that to continue. I don't think it's going to be one or the other. We expect fairly secular growth across the board.
Right, Mr. Puri, and lastly, obviously, I do want to take an update on what is happening in the Huntsman Advanced Material Solutions, which you acquired last year. So now, have we started seeing all the full synergies coming in from that side? And what is the room for expansion that you're seeing?
Potential, and in our view, there is still a runway for growth. The synergies from a revenue perspective, a lot of the cost synergies have been realized, but from a revenue perspective, we still believe in the next 12 months, you will see significant revenue synergies coming out of Araldite. It is the strongest brand in the epoxy adhesive space, and therefore we believe it still has a lot of potential. We've also launched the brand in Sri Lanka, in Bangladesh, in Nepal, and it continues to therefore move even outside India.
Okay, Mr. Puri, thank you so much for joining in with us on the show. It's always a pleasure having you on the show.